Every single morning at 9:30 a.m., something happens on NQ that destroys traders. We see the first 5 minutes rip in one direction. It looks clean, it looks real, and it looks like the breakout you've always been waiting for. But then, without warning, after we have placed our position, it reverses against us, and hard. Traders get trapped, stopped out, and confused, wondering why the exact same setup worked yesterday but blew up today. And if you've ever felt like the 9:30 open is unpredictable, volatile, or impossible to master, you're about to finally understand why. Because there is a dark side when it comes to the 9:30 open, a side that most traders never learn, and a side that smart money has been using against retail traders for years. Today I'm going to show you exactly how to trade the 9:30 open professionally and not blindly by chasing the first breakout, but by waiting for a rules-based break and retest once real momentum steps in. This is the exact model I use to scalp NQ every single day, and it starts with one simple thing. That first 9:30 to 9:35 5-minute candle. The 9:30 open is where most traders lose money because they misunderstand what it actually is. People think the 9:30 candle is a signal to enter. It is not. It is a test. That first 5-minute candle is used to establish the opening range, to trigger early breakout traders, and to build a pool of liquidity above the high and below the low, and then decide which side to drive once enough traders are committed. The move you see at 9:30 is often not the move you should be trading. Most traders do the same thing. The candle starts breaking out, they hit buy or sell at market, and they get whipped out as soon as volatility snaps back in. The truth is, you don't need to be the first one in. You need to be the one who enters after the level has been confirmed, after price action breaks out, and after that retest happens with confirmation. That is where we should be entering. We shouldn't enter as soon as price closes above with a body close on the 1-minute time frame after that first 5-minute candle range. Here's what we should be doing. Here's the structure behind the model and the actual rules so that we can stay out of trades like this and actually get winning positions. So at 9:30 open, I want you to go ahead and I want you to wait for the first 5 minutes to play out. This is on a 1-minute time frame. So we're going to go for 1, 2, 3, 4, 5 1-minute candles. That would be from 9:30 to 9:34 closure. That 9:35 candle, that's when we come back into the market. Once we wait for price action to either break out of the high or we wait for price action to come and break out of the low. So either we go ahead and we mark out the high and the low, and we just sit on our hands and we wait. That is it. Here we've marked out the low of the range. Here we've marked out the high of that range. That's it. Those two prices are now your opening range levels. And from this point forward, you're not guessing. You're not forcing trades. You're waiting for one of those levels to break and then be respected on the retest. So we're going to wait for one of these levels to break, price action to trade above it, come back, and respect it. You're not trading the chaos inside of this range. You're waiting for structure to form around the range. Now let's talk about the trap. Let's say the 9:30 candle's high gets broken first. We see the breakout is where most traders will jump in. They'll jump in immediately as soon as we get that candle body close. They see the breakout, they see momentum, and they hit buy. But then price snaps back. It tags the high again, and then it dips back below the low, and it can stop them out because they haven't waited for a confirmation. That first breakout above 9:30 high often collects buy stops. Early buyers get in at the worst possible price. Institutions now have liquidity to work with. If you buy as it's breaking, you're not just providing liquidity. We don't want you to become the liquidity. What we want is confirmation after the breakout level is the real support. That's what we want. And the only thing that happens on the retest. So on that retest, we want price to confirm it's wanting to go up in a bullish example, or getting a retest below the low and waiting for price to confirm that it wants to go back down. So first I want you to mark out the high and the low of that first 5-minute candle after 9:30. Then we wait for price action to break and retest one of these areas with rejection. So what does that mean, rejection? It's either a bullish engulfing or a bearish engulfing, or a very big bullish candle with a very big bearish wick. We want to see price and buyers step back in after heading back into that level. That way you're not trading the emotional spike. You're trading the structured reaction once that level holds. Now remember, that rejection there, that is your entry. That engulfing candle is your confirmation that buyers have stepped back into that level and that the breakout is being defended. That's our entry. So where does our stop loss go? Stop loss will be below the low of that engulfing candle. Or if it's a candle with a big wick, it will be below that swing low. I said here it stops covering the potential swing, because if we get a candle that closes back above this level, which is highly likely, we do get a swing point. So our stops will be covering that swing to give us some breathing room if the market wants to retest this level again. And our target will be a 2R target. You're not chasing the move anymore. You're joining it after the market proves that it wants to hold that level. And then we just sit back and we wait for the market to hit either our stop loss or our take profit. So here on NQ on the 1-minute time frame, we come to the charts right at 9:30. We can see that this 1-minute candle will be the 9:28 candle. It closes at 9:30. So what do we do here? Well, we just wait for the very next candle to open, and we want to see that first 5-minute candle's print. So we have the first candle, 1, 2, 3, 4, 5. We have our first 5 candles at prints, and now we can go ahead and we can mark out our zone. So we go at 9:30, we see that's the lowest point, and we can go ahead to the last 5-minute candle. So we can see the 9:34 candle, which is over here. There we have our range. But this is not the highest point of the range. This is the lowest point. So we're just going to go ahead and move this up to my highest point. Now, what do we have? Now we have that first 5-minute candles range of the 9:30 open. Remember, we want the first 5 minutes. You can go to the 5-minute time frame and mark the high and the low of the 5-minute candle. If that's easier for you, please go ahead and do that. Here on this, I'm just going to stick on the 1-minute time frame and to keep everything nice and simple. Now, what do? Well, now we wait for price action to break out on either side and show us some sort of rejection. Here we can see that we do wick above the high, and then we close back below. We touch the low, we close back above. So what do we need? Well, we need that closure above or below, and we need price action to revisit it. So here we can see we do close below it, we trade back into it immediately. Now we need an engulfing candle or some sort of bearish rejection immediately after touching this zone. We don't get that here, and we see price action just trades higher, which is not going to be sufficient for us. Now we get a nice and clean break. Now what do we need? Well, remember what I said? We need the market to trade back into that level and then give us some sort of bearish rejection to show us that this level is busy holding and price action wants to go back down. Playing price forward, let's see what the market gives us. We don't get that. Instead, we form a gap into this level. So now the market is just busy consolidating in and around that first 5-minute candles range. Now, I picked this example because a lot of people will stress and worry and not know what to do when we get the market being choppy like this. But we stick to our plan. Instead, we just go ahead and we wait for our rules to be met. We still have our first 5-minute range. We still have the market not giving us a clear decision. So now we still wait for the market to trade back into my level, and we can see here we touch the level and we reject that level with a nice big wick on that touch. Now you have two choices here. You can take, if it's not an engulfing candle, you can take the risky approach and enter as soon as we form that big wick. Stop loss goes above that wick, and our first target will be 2R. That can be your first entry point. The second entry and the higher probability entry is waiting for that candle to get engulfed. We see that we barely engulf it, but we do engulf it. We enter at as soon as this candle gets engulfed. Now, we have two confirmations. We have a very big rejection wick on that zone, and we have a nice engulfing candle, engulfing this up close candle. So that would be our valid trade, and we enter, we place our stop above the high, and we target a 2R, which lines up to this sell side liquidity beautifully. And we see the market runs down and hits our take profit. So here we have our final example. Again, same thing. We come on NQ on the 1 minute time frame right before 9:30 open. We see we have the 9:28 candle over here, and we're going to wait for this candle to close and then wait 5 minutes to get that range that I was talking about. So we're going to wait for the next 5 minutes to play out. And we're going to go ahead and we're going to mark out that range. So here we have that 9:30 low. Now let's go to the 9:35 candle, which will be the next one. So the 9:34 candle closes at 9:35. So this is going to be our range. Here we have that opening range that I was talking about earlier on in the video. Now, what are we going to wait for? We're just going to wait for the market to either take out the high, retest it with a rejection and take a long, or we're going to wait for the market to take out the low, retest it with a rejection, and we are going to take a short. So we just wait for either one of those two instances to happen. We see we do break out and close above. Are we going to take this long? No, we're not, because we don't have any confirmation. This can be a fake breakout. So we're just going to wait for the market to retest our level and then engulf. So here we have that retest. So we see that we do have a very big wick rejection. Like I mentioned in the previous example, this can be an entry, stop loss covering that low, and our first target will be a 2R. But if you want to wait for more confirmation, we're going to wait for this down close candle to be engulfed. We need a bullish candle to close above that bearish candle. That will be our higher confirmation entry. So now we see the very next candle. We do trade back lower. We still trade into that high, but we still need that engulfing candle. Now let's wait for that to happen. Here we do get that engulfing candle. So that will be our entry point. Stop loss will be at the swing low. You can place it slightly below just to cover a little bit more and cover spreads or commissions. Then targeting, we have a 2R. Now this is our entry. We have our first 5 minute range. We marked out the high. We marked out the low. We waited for a break and closure above, a retest plus a rejection. That is exactly how you trade this strategy. And then we see the market rallying up to hit our take profit. But on this entry, we see that price action comes back down into that opening range. And then we go ahead and then we engulf this down close candle again. So we have another potential entry. Stop loss covering this low, and our target can be again 2R. So here we have two potential entries on this one day, and we see the market then rally back up to hit the second trade's take profit. It does take a little bit of time, but that's where patience comes in as a trader. So why does this model work so well compared to just buying or selling the 930 breakout? Because it respects three professional things that traders care about. Structure. You're trading around a clearly defined opening range, not random prices. Confirmation. You wait for a break, a retest, and a candle pattern that confirms momentum. And risk. Your stop is tight, logical, and based on the structure you can actually see on the chart. Instead of hoping that the first move is real, you're letting the market show you where it wants to hold. And once that level is proven with an engulfing candle or a rejection candle, you're no longer guessing, you're reacting to evidence. So that's the truth behind the 930 open and why so many traders get destroyed trying to trade it. If you trace the first move, you're trading emotion. If you wait for the break, the retest, and the engulfing confirmation, you're trading structure. If this breakdown has helped you to see the 930 open move more clearly, then don't stop here. I've put together a free course that goes even deeper into structured professional trading models just like this, including how I frame my bias, how I manage my risk, and how I scale up my winners. It is completely free and it's the second link in the description below. Go through it, take notes, and you'll understand exactly how I approach the markets every single day. And if you're ready to take this seriously and to trade live with me on a daily basis, ask me questions in real time, and build real consistency, then go ahead and check out the first link in the description below for the mentorship program. Inside the mentorship, we trade live together Monday through Friday. We break down setups like this that's just little bit more accurate in real time. And we build a rules-based approach so that you can actually start trusting your executions and start seeing your account balance go up instead of down into a drawdown. That's the first link in the description below. Thank you guys for watching, and I'll see you in the next one.